This video, I'm going to show you all the available options to start investing in Canada so you can start your investing journey and make some money on the way. Welcome guys, this is Manish. Thank you for visiting my channel and make sure to hit the subscribe button so you get updates when I post future videos. And before starting this video, I wanted to say that I'm not a financial advisor and this is not financial advice. All the content in this video is only for entertainment purposes. And always make sure to do your own research before getting into any investment product. So we all thought about investing at some point in our lives, but many of us have this question where to start or how to start. So investing basically has a risk to reward ratio. The higher the risk, the higher the reward. That's how investing works. And before you start investing, you need to make sure how much money you're willing to put and how much risk you're ready to take. So we're going to start from the safest option and go all the way to the riskiest option. And for each option, I'm going to give you 3 ratings. First one is how easy it is to start. The second one is how much time it takes, and the third one is how risky it is. So the first option would be your bank savings account, also called a high interest savings account. So if you're someone who just likes to keep cash and who doesn't like to do a lot of work to get some interest, I think a bank savings account would be like the best option for you. And most of the banks currently, they're providing between 2 and 5% interest on all these accounts. And most of the accounts which gives 5%, it's going to be a promotional interest rate, which means that they give 5% for the first 3 months or the first 6 months. And then it's going to drop down to either 2% or even below that. I think the current option would be the EQ Bank Savings Plus account, where they're giving 3% interest and there's no promotional period or anything like that. It's just standard 3% interest on all your balances. High interest savings account, as the name suggests, as high interest. It's not really high interest, but as I said, the risk is less, and if you like to have some cash saved up for something, then keep it in a high interest savings account so it also earns some interest. And coming to the ratings, how easy it is to start, I'll give it 1 out of 5, 1 being the easiest and 5 being the hardest. It's really simple to open a savings account because most of us have a bank account already. And how risky it is, I'll give again 1 out of 5 because this is not at all risky. And how much money required to start this, I think pretty much you can put even $1, so you can even start from $1. The second option would be an RRSP, or also called the Registered Retirement Savings Plan, with your employer contribution. So the employer matching contribution is an optional thing. It only works for employees who's working as a full-time employee in a company, where the company matches a certain percentage of contribution which you are willing to also deposit into the RRSP. So let's say you're willing to deposit 4% of your income into your RRSP, the company also matches that to 4%, which pretty much comes to 8%. There's one negative point about this. So as you guys know, RRSP is not a taxable income, but anything that gets contributed from the employer side, that is actually considered as taxable income. So only what you deposit, you don't have to pay tax for it. Coming to the ratings, is same as a high interest savings account. It's very easy to start. You can start as little as $25 for most of the RRSP contributions. And the risk, I would give it 3 out of 5 because RRSPs can hold a variety of financial products, and depending on what you have inside your RRSP, the risk amount actually differs. So we have finished talking about RRSP, and the third option, it's obvious, it's a TFSA, which is a tax-free savings account. So a TFSA is exactly the opposite of an RRSP. Anything you deposit into a TFSA is a taxable income. So any appreciation or any dividends you receive from the deposits of the TFSA, all those are tax-free. That's why it's called a tax-free savings account. And like RRSP, you can hold a variety of products in a TFSA like stocks, bonds, mutual funds, ETFs, etc. And coming to the ratings, we have again 1 out of 5 for how easy it is to start, because it's very, very simple and it's not going to take a lot of money to start. You can start with as little as $25. And the risk, again, I would give it 3 out of 5 because it depends on what you're going to hold inside the TFSA. If it's cash, it's going to be less. If it's other products, then it's going to be more. So every person has a certain limit how much they can deposit every year into the RRSP and TFSA. So make sure to check your notice of assessment every year to see how much you can deposit, and make sure to fill that limit before you actually start moving into other products, because these options are very good to save even on taxes every year. Okay, coming to the fourth option, it's a little bit away from whatever we spoke so far. It's real estate, let's say buying a house, buying a condo, buying a property in general. So this might be the ultimate goal for lots of people out there, but it's a good variety to obviously invest in a property because you're going to have appreciation after 5 or 10 years. The value of the house or the property is going to go up. But the disadvantage of buying a house or buying a condo in Canada, as you all know, most of the real estate markets are too expensive right now, and it's not very, very easy to buy a house because even if it's just 5% down payment, it's very, very hard to save that, and it's going to take a while to actually save up that down payment. And in Canada, you cannot really borrow the down payment from anyone. It has to be in your account for at least 90 days. If you have that level of money, then definitely try investing in a property because that's gonna hit it off in the long run. Now coming to the ratings of actually buying a house and getting into real estate, how easy it is to start, I would say 4 out of 5, because it's not easy to actually buy a house, because even if you have the money, you need to go out, look for properties, at least between 30 to 90 days to actually finalize a house and finish the deal. So I would give it a 3 out of 5 on how risky it is, because it is based on lots of factors. It is based on each one's personal situation. So I'm gonna give it 3 out of 5. And how much money it takes to start this depends on, again, the value of the property and how much down payment you're gonna put and how much is gonna be like the monthly mortgage payment. There's like lots of factors. So I'm gonna give it 3 out of 5 because it's just neutral, so it depends on each one's situation. But if you don't have that much money for a down payment and closing costs and all those things, you can always look into REITs, which is also called Real Estate Investment Trust, which are basically like stocks. It's a paper ownership of just like a small chunk of a huge property. So there are many websites online which provide these services, where they have a portfolio of different commercial or residential properties, or like a mix of both. And you can basically start buying like a very small share of the property for even like for $20 or $50. If you don't want to actually own a physical property, you can always invest a little bit amount into REITs, which is very simple. It is easy to start an account, it's easy to open an account and deposit just like whatever you have, let's just a little bit, and start buying little chunks of ownership of properties or portfolio of properties. We have finished about real estate too, and the next option is obviously investing into stocks, bonds, mutual funds, ETFs, index funds, all those good stuff. Basically investing it into the stock market. So when it comes to stock market investing, there are different types of stocks, dividend stocks, value stocks, appreciation stocks. Stock market itself is a huge topic to talk about. I'll definitely make a video about stock market. So to start investing in the stock market, you actually need a stock brokerage account. So you need to open a stock brokerage account. They charge a commission whenever you make a trade, which means that whenever you buy a stock or sell a stock, they actually take a certain charge which goes as a commission. And most of the stock brokerage accounts which the banks provide, their trade commission is very high. The average trade commission which the banks provide is $6 or $7. So I would highly suggest looking into brokerages like Questrade or Interactive Brokers. These are like third-party stock brokerages where you can open an account with your ID. So I've included the links for Questrade and Interactive Brokers down in the description. Definitely go and take a look. I would highly suggest buying ETFs and index funds compared to individual company stocks, because an ETF is a collection, like a basket of different stocks in a specific field. Instead of just buying just like Apple stocks, you just invest into a tech ETF which has all the huge tech companies, including Apple, Microsoft, Google, and all those good stocks. So even if one stock goes down, it doesn't hurt your profile a lot. And as for the ratings, I would give how easy it is to start. I would say it's 2 out of 5 because it takes a little bit more time than opening just a normal savings account. And how risky it is, I would say 3 out of 5 or even 4 out of 5, because if you don't know what you're doing inside the stock market, it might turn out very bad for you. And how much money do you need to start this? It depends on the brokerage. Most brokerages, they would allow you to just put like a minimum of $500 or $1,000, and brokerages like Interactive Brokers, I think they even let you start with just $100. So I would give it a 2 out of 5 on how much money you need. So having spoken about the stock market, we eventually come into the next thing, that is crypto. So cryptocurrency are basically digital money and digital tokens and currencies which are used for various purposes. And in the recent years, especially in the last 2-3 years, crypto has gone up like a lot. And everyone has got the awareness what is crypto, because 2-3 years back even I didn't know a lot about crypto. So a lot of awareness has come regarding the crypto space and all those things. And when it comes to crypto, it basically works very similar to the stock market, but it's just the factors which is affecting the whole industry is different from the stock market. So investing in crypto is basically much more riskier than investing in the stock market. Always have like a very small portion of your investment into crypto if that's something that excites you. And so coming to the ratings, how easy it is to start, I would give it a 2 out of 5 because there are so many crypto exchanges like CoinSmart, Crypto.com, Gemini. I've also included all these links in the description, so definitely go and sign up and create an account for yourself. I mean, it doesn't hurt hurt to actually buy, $10 or $20 worth of Bitcoin and just keep it. And how risky it is, I'm going to give it 5 out of 5 because similar to the stock market, if you don't know what you're doing inside the crypto industry, you're going to have a bad time. And how much money do you need to actually start this? You can buy Bitcoin for as little as $1 in most of these exchanges and apps. So that's pretty much the mainstream investing options, and we are now coming into the other options which you can consider if you again want, after investing onto all these things, if you still want more diversity or more variety. The first one is, I came through this website called Masterworks. So this is basically investing in art and paintings. So like REITs, this company has a collection of different art and paintings by really famous artists. Basically they buy the painting and they just start giving out shares of that painting, and you can buy shares of the painting. If what they claim is actually right, this is a really good option to invest and really good variety. Definitely go and check out masterworks.com. I'll put the link in the description. So coming to the ratings of these other options, I would say it's relatively easy to start. The amount of money you need, it's a minimum of $1,000. And how risky it is, I would give a 4 out of 5 because, I would say this pretty much is like a REIT. It has a certain level of risk to it. The other option to consider would be peer-to-peer lending. So peer-to-peer lending companies are third-party companies where they have two different sides. One side has like an investor community and one side has like a customer community, where basically they get money from the investors and they provide loans to the customers. So they just list different loan applications where people are applying for loans, and you can invest it into all those loans. People who are usually applying for loans in these places are people who are not getting approved by the bank. Basically like a private lending. Some of these loans might get default. One of the loans where I invested just got default. So I did get like a good return of 12 to 13% up until that loan got default, and I pretty much had like $75 to $100 into that, and that $100 is gone. So whatever I earned, whatever interest I earned, everything was gone. You can try it, but don't put like a lot of money into it. I did try that and I had a bad experience. So coming to the ratings, it is easy to start an account in these. It doesn't take a lot of time to create an account, but it is a little bit risky. As I said, loans might get default at any time. You don't need a lot of money, so it's 1 out of 5. You can start as little as $25. So we pretty much covered the major investment options, but I just want to give 2 other options. So these options are not like very direct investing options. It is a very indirect approach to investing, but I would also consider these options as investing. So the first would be paying off your debts. So if you have a lot of debt, let's say credit card or loans or line of credit or whatever it is, I would say before actually starting an account or opening a savings account or opening a TFSA or RRSP or anything like that, I would say it's always good to pay off your debts and then start investing, because you're bringing down your liabilities and you're increasing your assets. Instead of that, if you just keep adding up your assets, your liabilities is still gonna be there and you're gonna pay interest on all those things, and basically you're just losing more money. And I will make a separate video on how to pay off your debts. The second option which I want to give is investing in yourself. So investing in yourself can be anything. It might be learning a skill or starting a business or starting a side hustle. It's gonna take a lot of time. I can come to the ratings and I can say how easy it is to start. I'm gonna give it a 5 out of 5 because it is not easy to start a business or start a side hustle. Investing in yourself is gonna take time and it's gonna take consistency. And how risky it is, I don't think it's risky at all, because end of the day, even if it fails, you will still learn something. So it is not risky at all. So I'm going to give a 1 out of 5 for that. And how much money do you need? I'm going to give it a 3 out of 5 because it depends on each one, what they want to do. So, you can not spend any money and still learn something, or you can spend like thousands of dollars. So it depends on what you want to do. And if you want to learn something, there are many good course websites like Udemy, Skillshare, Teachable, and all these good sites where they offer so many programs, so many courses for very good prices. It's not very expensive. So if you are interested in something and you want to learn more about that, you can always visit these sites. I'll put the links down in the description. So that's pretty much it on how to start investing in Canada and all the investing options that is available in Canada. And definitely if I have missed something, if I've missed any investment option which is like a really good option, definitely comment down below and I would also learn about that. I hope this video was useful, and please do subscribe to the channel and please turn on the notifications so you get updates on my future videos when I post them. Let's learn new things together and invest in the future, and I'll see you guys in the next video. Thank you. Bye bye.